good morning and welcome to VSA Capital 5 Minute Morning Miner on Wednesday, the 9th of April. And it's crazy tariff day, I think. Tariffs now up to 104% in America on Chinese goods. It really is becoming quite a roller coaster. No one knows where we're going. Looks like the billionaires and Elon Musk are getting a bit nervous about the whole thing. I can't see China just rolling over and having its tummy tickled. This is pretty crazy stuff, isn't it, Paul?
It sure is. It's pretty extreme here. We haven't seen this in many years here.
This is definitely what they would call a black swan event. I don't really see anybody being a winner, but maybe it is some sort of reset about the whole world. I don't know. Let's hope somehow we come out of it smiling. But back to mining. Obviously, I mean, we all know that this global trade war is causing economies globally to slow down, which is causing an impact on commodities. We're seeing it particularly in the oil market, where Brent was down to $60, tipped up a little bit to 61 now. But obviously, we've seen the gold price come right down to 3,000, sort of 10. But other commodities have actually fallen harder as well. So it is having an impact on the mining companies short term because of worries about a global recession. But let's look at the news today, and let's just start off with one of my favorites. And I do tend to maybe overly talk it, partially because I own them myself in an ISA. But Central Asia Metals has sort of reminded everybody, I suppose, almost today, haven't they, Paul, that they did have this 76.1% shareholding in Copper Bay, which is a Chilean copper tailings business. And they've sold it, actually, for a pretty good price. It was about $7.5 million or something in two tranches, and they'd written it down to zero. So it's nice, sort of be a nice addition to the P&L, should we say? What's your view, Paul?
Yes, that's right. And they sold it to another AIM-listed company too, Guardian
Actually,
Metals.
stop there a second, Paul. It's not. There's two Guardian Metals, all right. This is not the AIM-listed Guardian
Oh,
Metals.
sorry. Yeah.
No,
Okay.
it's all right. Just to correct you before you get going.
All right. Appreciate that very much. But yes, Guardian Metals is the name of the company which otherwise has picked up this asset. It was one lying fallow in Central Asia Metals portfolio after CAML had done some feasibility work on it some years ago and determined that it just didn't quite have the internal rate of return at copper prices and expenses at that time to develop it. So they essentially mothballed the story here and wrote it down, their exploration costs down to zero. But here they've done a deal for it because the copper price, of course, as everyone knows, is much better than $4.25 a pound and has been for quite some time now in US dollars. So it's do a new feasibility on this, which is effectively a beach tailings project. It was a mine that had disposed of its tails into an active waterway and is now along a beach right there on the coast. And if I remember correctly, the grades of copper in those beach tails were something above, just above 0.3% copper, but you'll have to verify that again. But we'll see what can be done with it. But in the meantime, it's a little bit of cash back on the coffers for Central Asia shareholders they weren't expecting. So a good plan there.
Yeah, I mean, the trouble is, it sort of makes you think, oh God, is this what's going to happen to their Scottish nickel project? In 10 years' time, we'll be reading that they've sold that off for it's where is the strategy? Actually, the other interesting thing, I mean, I think, as we look around, Paul, you may have a different view, but where that appears to me to be a lot of potential value in picking up a project potentially is in South America. There are one or two countries there, they're pro mining. You can get some really good projects, which, for pretty good value prices. Still, you haven't got this sort of the issues you have in Africa. It's different sorts of issues, but I would say it's less of a battleground maybe. They really do need to sort out their strategy, and the share price now yielding over 12% tells you everything, as I said yesterday. But anyway, enough on that maybe. It's worth talking about one that we've commented a lot. It's sort of just everyone sort of was a hot stock. Now it's completely out of love with everybody, but actually it's a well-run business. But Jubilee Metals, they signed a deal on their surplus PGM feed material, didn't they, Paul?
Yes, they have because they're treating so much more chrome ore at this point in time. They're ending up with stockpiles of essentially post-chrome recovery residues, which are more PGM enriched, therefore, and they need someone to otherwise process that material. They have signed a deal on that in order to get PGMs processed here. Potential for increased deliveries up to 30,000 tons per month, so it's not a small quantity either, but they're beginning with 18,000 tons per month to commence in this process here. And earnings generated from the project will be on a shared basis with the party treating them. So we would assume it isn't readily evident who the party is, but it's probably one of the platinum smelters there in South Africa that's taking the feed. So just a further consolidation for revenue generation for Jubilee.
Yeah, and then the other one that caught my eye a little bit is the Baker Steel Resources Trust, which updated on their NAV as a day, up 0.9% in March. It's quite a good sort of, or has in the past been deemed a little bit of a good bellwether, shall we say, in terms of the resources sector, because theoretically it's a resources investment trust. The only problem they've got to a large extent is that they're actually now quite exposed to just one or two stocks, and they've got very little liquidity, unfortunately. And the two big stocks they hold are Futura Resources, which is about a third of the portfolio, and Cosmos Group, which is about a third of the portfolio. So you've got 2/3 of your portfolio in two stocks and little liquidity. Interesting enough, though, they also have quite a big holding in Caledonian Mining, Metals Exploration, which I think is a really interesting company at the moment. But they have a bit of a leftover holding in Tungsten West, and also First Tin. But it's a very consolidated portfolio. I don't know if you've got any view on that, Paul.
No, I think you've covered that one pretty readily, I think.
Yeah, I could give up and be a mining analyst, couldn't I? Anything else you want to quickly mention this morning, Paul?
Yeah, I have to mention this story out released by ASX listed Challenger Gold. They have announced a doubling of their compliant gold resources in Ecuador across their projects here to 9 million ounces. And they do intend now to monetize these assets as they have expended their exploration budgets that they had intended during 24 and earliest to 2025 here. It is of which across mostly two projects, one of which El Guayabo they have 100%, and then one called Colorado 5, which has a 50%. They have a 50% interest there. It is 9 million ounces gold equivalent. It is 100% growth, and there is a lot of upside remaining on these two projects, as only about a third of the total anomalies across the projects have been drill tested to date. As I say, they're looking for somebody to take them on or otherwise help them monetize them. So contact them.
Well, there you go. South America, as I said, that's the place to be. All right, that's fine for today. And we'll be back tomorrow. Thanks.
Very good. Thanks.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.